Good afternoon. My name is Amy Bach, Executive Director of the nonprofit consumer organization United Policyholders. I'm so glad you were able to make the time to be with us this afternoon. Sorry for the circumstances that made it necessary for us to host this and for you to have to be on this. But our goal today is to tap the expertise of our organization and an expert panel that was gracious enough to share their professional expertise and time with us today to give you guidance on keeping your home protected when insurance options are limited and expensive, as is the case today in many wooey suburban and rural regions throughout the state of California. So I want to thank my staff, Carolyn Winter and Valerie Brown, who are also with us for helping us pull together the information that we're bringing to you today. This is the fourth in a series that we have been offering on this topic because the situation is changing and dynamic. We are continuing to keep our finger on the pulse of the market and who's in and who's out, and what good things the Department of Insurance is doing to help, and what good things insurance professionals are doing to help, and then of course what our organization is doing to help restore better options for keeping your property insured in this state. Just briefly about UP, we're a nonprofit. We've been around since 1991. We're funded by donations and grants. And we, part of our funding is coming from the California Office of Emergency Services. We run 3 programs: the Roadmap to Recovery, which you can see some of the areas where we are actively providing guidance to people. The Roadmap to Preparedness, through which we're offering today's program, and then our advocacy work, through which we try to solve problems, big picture problems like this one. And a lot of our work crosses our different programs. So for example, in areas where we have provided wildfire recovery services, a lot of people are having trouble now. If they're outside of the 2 years that they're guaranteed a renewal, people are having trouble getting finding coverage, and they're getting dropped, and so that's we've been on this, trying to solve this, helping solve this problem now for quite some time because of all of our engagements in wildfire prone areas, and we have a very healthy long-standing partnership with the California Department of Insurance, which is why one of our expert panelists here is with us today. So just a quick reminder that great preparedness resources are available through the Listos California program, and we are participating in that effort. So you can go onto the website and get all kinds of resources on for making sure you're signed up for alerts and all kinds of other helpful resources. So I want to thank our panel. Tony Signorelli is with us today. He is a deputy commissioner at the Department of Insurance. Tony is also an attorney, but not practicing, and has just been a tremendous help to us, and is been very involved over the years in trying to get the protections that are in place, the non-renewal moratoriums, the law that says the insurer can't drop you if you lose your home in a fire for 2 years, the law that says that if you live in an area near where there's been a wildfire, that they can't drop you for 1 year after the fire. So thank you, Tony, for being with us. We're also joined by Phil Irwin, another hero of mine, who runs his own insurance agency and also is helping out the FAIR Plan, which gets a lot of grief, but is an incredibly important resource for property owners in California and for communities because it is the insurer of last resort. And we'll be telling you a little bit more about the FAIR Plan options. Also very happy to be joined by Ruth Stroop with the Ruth Stroop Insurance Agency in Oakland. And that's one of those areas where we have worked. In fact, that was the first area that we ever worked in. So I think probably a lot of the people that we helped recover from the Oakland Berkeley firestorm in 1991 through 93 are clients of yours, Ruth, I'm guessing. So thank you for being with us. And finally, we have another hero from an area where UP has done a lot of work, the Santa Rosa area. John Wheatley is the VP of Insurance Services for Redwood Credit Union. And they are both a credit union, but also they do have an insurance agency. So John, thank you so much for being with us. I'm not going to spend a whole lot of time on this slide because you all, by the fact that you're here means that you know a lot of this to be true, that people are getting non-renewed by insurance companies they've been with for decades, and name brand insurers may not be an option for you. You may be looking at insuring your property through a company you've never heard of, including a company that's in a category called non-admitted or surplus lines, means the same thing. Slightly less regulated company, but in some cases, a perfectly good option. In today's world, a good agent or broker has never been more valuable. We as a consumer group have always told people you can shop for car insurance on your own, but when you're insuring what for most people is their biggest asset, it's usually a good idea to use a professional. But it's almost imperative now in these areas because we put a lot of effort into finding the panel today, and there's a reason why they're all here. They are exactly the kind of insurance professionals that we recommend you find. They are keeping their finger on the pulse of what's going on, and they are beating the bushes for the best options for their clients, and they're sharing your pain, because I think a lot. You talk to any honest insurance agent who does business in WUI and brush areas, and they're going to tell you this is the most difficult time they've ever had, really putting their clients in with policies that they feel comfortable recommending, and that's not just the coverage but the price. So it's you may say, well, they don't feel my pain, I'm the one paying the premium, but the reality is for a diligent insurance agent or broker, it's very, very hard and unpleasant for them to have to tell people to pay the kind of prices that some people are paying. So I extra appreciate these folks being with us. And then the light at the end of there's a little bit of blue sky, in that some insurers are starting to get on the train with us and the DOI, that there actually is a lot you can do to prevent homes and communities from burning. And when people are doing those things, they deserve to get a break on their insurance. And we are working very hard to make that happen. So, is home insurance still worth it, right? Some people may be thinking, if my lender is not required, if I don't have a mortgage, I inherited the house or I paid the house off, is it worth it? And it does break our hearts at UP when we go into a disaster area and find more and more people not having insurance, because the reality is insurance money, not charitable or government aid, is the number one source of money that helps people rebuild and recover after disasters. The people have all kinds of fantasies about FEMA. The FEMA grants to individuals are needs-based. You have to be below a certain income level, and the biggest grant they give is $36,000. Their average is $5,000. So no home is getting rebuilt for that amount. A lot of FEMA money goes to lots of good things, repairing roads, bridges, etc., and funding case managers and things like that. But for dollars to pay for work and repairs, it's not going to come from FEMA. SBA loans are great because they're low interest, but you have to repay them. And then again, if you look to the charitable entities that rebuild homes for people who are don't have insurance or low income, it's really goes to the people that are the absolute lowest income and the most needy. Very important message from UP before we get into the nuts and bolts of shopping. Despite the limited options and the high prices that people are paying, it's still important to be prepared and insure your dwelling as best you can. And that means getting educated on your options, seeking out a proactive consumer-oriented agent or broker, but avoid underinsuring your dwelling. And that means really trying to have the amount of your insurance match what it would cost to put that house back from the ground up, including compliance with changes in the building code since your house was built. I'm comparing what the premiums will be if you use different deductibles, and then reducing and eliminating non-essential coverages where feasible. We're going to talk with that with our panel about that. Creating a home inventory and storing it safely, of course, is very important. We just say these days, if you do nothing else, take your cell phone, walk around your house, put it on video, walk around your house, narrating as you go. Here's my bedroom set that we got at Macy's, and here's my open up your drawers, and have it all on your video, and then put that send that video to yourself or to somebody where you know it's going to be accessible, and that will really get you in a lot better place if God forbid you do have a loss. Help your community be fire wise or fire safe. Volunteer if you can. But then take steps to harden your home and create defensible space. Screening vents so embers can't fly in. Creating that 5 foot of defensible space around the home that firefighters say makes such a big difference. Keep your gutters and the areas under your decks clear. And there's lots of other things you can do. You can go to that link there, or the Listos site to get more of those details. We're doing a lot to help. And I know you're really wanting me to get right to the magic wands that you're hoping we're going to pass out today. We are coordinating very closely with the department as well as firefighting agencies, the Institute for Business and Home Safety that launched the Wildfire Prepared Home, the state agencies that the Department of Insurance is working with on their Safer from Wildfires initiative, webinars like this one, and the work that we're doing through our WRAP initiative. We also are, as best we can, dialoguing with insurance companies and trying to keep bringing them along, because we know that when insurers incentivize and reward individual and community wildfire risk reduction, we all win. And the rewards we're looking to insurers to provide are premium discounts, helping people being more open about risk scores, not just cutting people off arbitrarily. And then, of course, we're looking for insurers to reward people by renewing them, by not dropping them. And of course, the most important incentive for mitigation is the house is less likely to burn. Okay. If you have a minute during this program or after, please do log on to this link and take our California Home Survey. We've had this open for a while, and it helps us when we get requests from the media to say, well, what kind of premiums are people paying? We go to our survey data. These are some of the resources where you can turn to for help. This is just some of the lingo you're going to hear. Dropped or non-renewed, that means your insurer no longer wants to insure your home when the current contract expires. They're usually a 1-year term, sometimes 6 months. It's different from being canceled. That's in the that can only happen in the middle, if something has changed or you're not paying the premiums. The difference in conditions is a patch product that fills gaps in a fair plan policy. We'll explain this difference between an admitted and a non-admitted. And then you'll hear some of these terms. SIGA, that's the main difference between an admitted and a non-admitted insurer is that an admitted insurer, and those are the brands that you know, State Farm, All State Farmers, etc., they participate in this guarantee association so that if, God forbid, they ran out of money, there would be a backup. So it's very, very rare. There was one insurer that went belly up after the campfire. And so their insureds had to go through SIGA to get payment. And so it's the one major advantage that an admitted insurer has is this backstop, but really it's such a rare event that it isn't the be all end all. That's there. Even if a company is non-admitted and not part of SIGA, it still can be fine to insure your home through that company. And we'll talk about risk scores as we go. Just a couple things. If you do get a non-renewal notice, Tony, can you just walk us through this requirement?
Yeah, Amy. Recently, we got this law passed to extend the time period, which is now 75 days. So your insurance company must give you 75 days notice prior to your 1 year, let's say your 1 year contract expiring, whether they're going to non-renew you. So you'll have 75 days time before your contract ends to shop around and look for insurance.
Okay. And if they don't do, if somebody got less than 75 days, they can call your toll-free hotline, right?
Right.
Okay.
Yeah. And basically if they don't give 75 days, the contract gets extended through that 75-day period, once they do give notice. So it will extend, even though the company might think the contract's over, we would make sure they extend it.
Yeah. Okay. So of course, most people want to know, why did I get non-renewed? And you don't always know. Certainly there'll be situations where the insurer tells you in the non-renewal letter, they're supposed to tell them, right, Tony? Is the letter supposed to say why?
The letter's supposed to give the reason. Some companies do it better than others. Some companies get very specific and you really know what that specific reason is. And other companies maybe generally say wildfire risk or some generic response, which we try to dissuade insurance companies from doing when we find out about it.
Yeah. I mean, before this situation got as bad as it is now, it was pretty common that you could go back to your insurer if they said, we're not renewing you, we want you to put on a new roof, or we want you to do such and such. And if you would do that thing, they would not drop you. It's gotten harder. Ruth, are you having any luck getting insurers to reconsider non-renewal notices?
Not really. What the non-renewal programs are different from inspection cancellations. So we can do some of the risk mitigation, like cutting trees and things like that to avoid a non-renewal. But if a non-renewal is based on location, not just site specific, but that combination of the access road and the overall brush, you can't, that's out of the insured's control.
Yeah.
So we had a gentleman call and he had done all this trimming and then he still got a non-renewal notice because they were a little bit out of time from another carrier. So we see it all the time. And it's very, very hard to fight a non-renewal if it's for something that's not specific to your individual home.
Mm-hmm. So John, any luck getting any of your insurers that you work with to reconsider a non-renewal?
We're pretty much in the same camp as Ruth. It's an ongoing battle. I will tell you, we did happen to have a carrier that gave 45-day notice of non-renewal. And we called them out on that and they extended it for another year. So the insured knows that he has coverage for another year, but it's 75 days before the the renewal date, he's going to get canceled. But
right.
That was a fun win, if you will.
Yeah.
But essentially, if it's called out for the reason and they mitigate against that reason, it's really, really still hard to have the consideration for renewal.
Okay. Phil, how about you? Any kind of a different view? I mean, it seems like insurers never used to, never, they rarely inspected. Now they're like almost always inspecting, correct?
Oh, absolutely. And I would just say even on early term policies or newer policies, I think that's something where I think where sometimes they'll be surprised where a carrier will be okay with something going in, writing it, and then they'll come back and within the first 30 days and say that it's no longer meets acceptable maintenance requirements, or there might be something. And sometimes you can feel like it's a stretch where you can just tell that the carrier really just wanted to get off of it, use that as an opportunity to get off of it. So again, I think it's good to know that information up front, so you're not setting somebody up for disappointment. So again, a lot of times, even when there is somebody where it's an iffy area, we'll still show them what the worst case scenario would be to fall back on the FAIR plan if they needed to. But that's something we're experiencing more just writing new business.
Yeah. So Tony, there's what, 100 and some different companies that sell home insurance in California. How many of them have actually completely pulled out of California?
We're not aware of any insurer that completely pulled out. Some of them have stopped writing new business in certain areas, and then they might go back in, and then they might stop writing business in other areas. So every now and then we get notice from some insurance companies that these counties or these zip codes, we're not going to write new business in for a certain period of time. Then they'll come back later and let us know that we're gonna start writing there again, but we're not going to write in another area. So it's kind of a moving target.
Sorry, just a little sneezing fit there. But okay, that's good, because I think there's a lot of rumors that flying around, and so there's not any insurer that is completely like AIG. People say AIG is not writing, but they're still they may not be writing in these areas, but they're doing other business in the state still. Yes.
Yeah, for the most part. I mean, there are some smaller companies that have recently let us know that they're thinking about not withdrawing from the state completely, but not writing new business. They're still going to keep their renewal business to the degree they keep it. But yeah, it's still in flux right now. There are companies making decisions now, so that could change.
Yeah. So just in terms of the value of loyalty, and how, if you've been with an insurer a long time, Ruth, is that helping? Does it help?
My experience is that we have to treat everyone fairly, which means that we don't get to discriminate towards longtime customers. We don't have the opportunity to discriminate towards multi-policy customers. If we make a rule that we're not going to do something, we need to implement that rule across the board.
But what I mean is, are you maybe I didn't explain it right. Are you finding that with some of the insurers, the fact that this customer has been with them a long time, does that make it easier?
No, not in my experience. My experience says that if the carrier files with the department that they're not going to do something, it doesn't matter how long you've been a customer. They can't discriminate towards you for your loyalty. They can't discriminate towards you for being multi-policy. They really say, if we don't take this location scenario, we need to treat fairly. And if they say, if they say they're going to do a lottery system or a fire line system, or like whatever evaluation system they're going to use, but we can't, insurance carriers are required to be fair across all customers, regardless of their length of time as a customer.
Okay. John or Phil, any different view? I mean, are you able to kind of use the customer loyalty longevity argument to get some insurers to not drop people?
I would have said 3 or 4 years ago, yes, but I'm in Ruth's camp that today, if the notice is the notice, it's almost, I haven't had success at winning.
Mm-hmm.
No, and I would say that's probably the most shocking component for people, especially people who have been with the carrier for a long time. they're just shocked that they're being dropped. They've never had, you hear the story. I've been with them 20, 30 years,
Yeah.
never had a claim, have all these, policies with them, and now I'm being dropped, and it's been every carrier. So it's not just one. So you hear that story more frequently, if any, more than anything.
Yeah. So again, if you're looking, to make sure that there were no technical violations in when you got your non-renewal notice, I refer to this as the Newsom-Lara order because it's a two-part thing. The legislature gave the governor the ability to declare an emergency in an area, and then that triggers the Commissioner Lara's ability to issue a moratorium. So, and then Tony, can you explain? So the moratoriums expire, right? So how long are they in place?
They're in place for 1 year from the date that the governor issues his declaration.
Okay.
And so there's 1 year of protection. So in that 1 year, we would just recommend that consumers look around and shop around just in case at the end of that year they are going to get non-renewed. And
so I think the moratorium, so if you want to find out if there's a moratorium in place in your area, you can use this, you go to the insurance.ca.gov and you can, there's a place where you can enter your zip code and you can see whether there's a moratorium in place, but these are the areas where, that are currently covered. I mean, the good news is that this has been a much better fire year than a lot of people predicted so far. And we hope that continues, but that means that the moratoriums are expiring and not being renewed. So I think, John, did it feel to you like you could see an increase in non-renewals in your area in Santa Rosa once moratoriums were starting to expire up there?
Significantly, yes. We have several carriers that have provided us a list that they're, getting off 150 policies or 44 policies in this area. So we're definitely feeling the impact of it.
Yeah. So start shopping ASAP if there's no technical violation, and try not to take it personally. You can see that this is hurting a lot of people across the board. This is just a little bit of information for renters, not suffering as much as homeowners are, for sure. So CDI, that's Tony's agency, is helping by enforcing the 75-day required notice and the moratoriums. They are doing their best to dialogue with insurers on a regular basis to try to address whatever reasons the insurers have. Some of their reasons are political, and some of them are, I'm convinced that a lot of the problem is the technology that is now available to insurers, such as models and scores and that make the wildfire risk so much more vivid to the insurers than they used to be. And of course, all the inspections and of course the news, climate change. So there's a lot of reasons behind why this has been happening. The department has been in a difficult position, I think, with home insurance rate increases because and it also, obviously, the mega fires. We had a bad run in California. We had the 2016 we had the tree mortality crisis, and then 2017 we had the North Bay fires, Atlas and Tubbs, and then 2018 we had the Woolsey fires, and we had the Thomas fire, and then of course we had the Camp Fire off the charts in Paradise, and a lot of other fires in between, the Valley Fire and Grass and CZU, etc. So those are all obviously the factors that are all combining to make this a problem. But Tony, if I'm not mistaken, I mean, the commissioner has really had to approve a lot of the home insurance rate increases. And that's why I think, when insurers complain, oh, California, the reality is they've been getting a lot of their rate increases approved, have they not?
Yeah, if not their entire request, partially due to what you just explained. There are specific criteria that the department is required to look at, and if those criteria are met, then we have to approve those filings. And we've been successful in removing some of the excessive charges that we've seen with some insurance companies and keeping it as down as far as we can.
Right. But obviously, if insurers were not, or if the, if they weren't getting their rate increases, we wouldn't be seeing the kind of premiums that people are getting hit with. Okay, so the department also offers a finder tool and a chart of insurers that are offering discounts on fire hardened homes. So that's good. So you can use those tools. How agents and brokers are helping. They're hard at work, trying to, like I said, beat the bushes, trying to tailor, helping people, if you don't have other structures, if you don't have a barn or a freestanding garage, pool, walkway, retaining shed, anything like that, there traditionally have been a lot of policies where you just have to take that. It's part of the package, even if you don't have that. I think, was it Ruth or John or Phil? One of you guys, when we were prepping, we're talking about there maybe being some newer options where you can actually reduce if you don't want to have a whole lot of contents coverage, you just want to have basic, or you don't want other structures. Are you finding it options for people in that way? Anyone jump in?
Well, I think the fact is, when you're at this point, you're considering expensive options. So, when you're in an area has no issues, a full blown HO3 with all the bells and whistles, you don't really have to. You don't feel like you need to look down as much at what coverage B is or coverage C is in some cases, because in most cases it's excessive, or it's more than ample. But in these cases, you really are talking about outbuildings or the extent of coverage B and C more. You definitely want to get coverage A right, and I think that's really the process people are looking at, is because they're, in a lot of cases, they're having to make some compromises, and they're weighing out the pros and cons of each item. I'd say the consumers are much more educated on how the policies work than ever, which is a good thing.
Yeah, I was going to say, like, I bet there's a lot of people who are registered that know what you meant when you said coverage A, right? That's structure. Ruth, is there something that you wanted to add?
Well, the thing that we have in California is a very, very high cost of construction. So your traditional home insurance policy that comes with a percentage of the dwelling coverage often overinsures the personal property and other items. And I hear complaints about that. And the surplus lines markets were often able to adjust those coverages to a more reasonable percentage. And in the FAIR plan, it's completely a la carte, so people can do what they want to do.
Yep.
But we definitely, if you don't have a house because of a large fire, and we plan for small, medium, and large losses. If you have a large loss, it's going to be a while till you get your personal property again.
Yeah.
If you have a medium loss, you may need personal property or you might not, right? Like a kitchen fire is covered by the FAIR plan as much as a wildfire, and people forget about the small and medium losses. We also see people willing to take on very high deductibles, and I don't always think that adds enough value to be worth it, because when you have a medium loss, you might not be able to take advantage of the policy the way it hoped.
Right. So John, can you give us a little insight on what is influencing insurers' decisions today?
You said it with technology, there's so much available of data and modeling. Insurance companies have access to a lot of different services, from fire score to hydrants. We use Hazard Hub quite a bit, and Clue, which has always been around. But essentially, there are so many companies that are providing information to insurance companies to say, hey, I have this thing about wind, I have this thing about fire, I have this thing about communities. We have a drone service. You want to use our drones to go fly over and look at it. So there are so many factors influencing how the rate goes into play today.
Yeah.
than ever before. Data is very accessible for them.
Yes. And at their heart, insurers are just very sophisticated gamblers. And when they think a bet isn't a good one, they won't take it. And that's kind of a lot of what's happening. And okay. How can I find out what my home's risk score is? Tony, you want to start on this one?
Yeah, Amy, I think, first of all, ask your agent, broker, or the insurance company directly. They should be able to give you that answer if they're using a risk score. And if for some reason they don't want to give it to you, that's a red flag, but contact us and we could facilitate that. I will say also that the new regulations that Commissioner Lara just put into effect, that go into effect in 180 days, or the insurers have to start implementing in 180 days, a requirement that they give you your risk score, a requirement that they must tell you what went into your risk score, as well as the ability to appeal that risk score. And so insurers are now putting in place an implementation process that's due within the next about 5 months now, to allow consumers to have that ability.
Yeah, and that is a really important initiative. Tony is referencing a set of regulations that our organization was very involved in helping support and develop. And that's one of the key pieces is, when this problem started happening after the tree mortality crisis came out, and it sort of combined with this Fireline scoring tool that made it so much easier for insurers to put homes in the discard pile just based on this number. We saw how powerful the risk scoring system, how powerfully it was affecting consumers. And so the department has taken, I think, a really important action that we had asked them to take of like, okay, we got to do something about this, because it's kind of like your credit score, right? If it's really having that big an impact on your pocketbook, you need to know. So if there's anything you can do to fix it, that you can. So John, I think you had a success story with correcting an error that helped you with a client, if you could share that.
Yeah, actually, that was Phil on the fire hydrant,
I'm
which
sorry.
is a great move. I've implemented it since yesterday.
Oh, wow. That's awesome. Phil, do you want to tell us? I apologize. Thank you, John.
Yeah.
Without getting too technical, basically the hydrants are mapped through the ISO mapping system. And from, as I understand how the process works, and that's what bases your protection class on as well. It's a factor in your protection class, but basically there is an option because we get asked, how do we, if we have our own private purveyor water sources or public sources nearby. And there are cases where maybe new hydrants have been installed and the mapping hasn't been updated. And that's something that the local fire chief has to do, I believe. That's who initiates the process with ISO. But there are cases, as an example, here in El Dorado County, the El Dorado Irrigation District, there's a process to request installation of a fire hydrant. Again, I don't know how many people have been successful with that, but I know there's a process that exists. Well, they'll look at that case by case, and that is something that can impact your protection class score. So, and that'll impact your rate as well. And so again, in cases with the FAIR plan, that could be, you can cut your premium in half virtually. If as an example, the fire hydrant, if it falls within 1,000 feet versus it being beyond, that could be as much as doubling your premium or cutting it in half.
Wow. Okay. So that's a very tangible one. So this is just a snapshot of some of the companies that our agent broker volunteers are still in some cases being able to place people with. So I know let's see, we don't have a State Farm agent here on the panel. We have but I think if there's anybody on the panel that I think one of you said that you actually have had to send some people suggest that they try State Farm. John, was that you? I can't remember.
Yeah, that one was. We do everything we can. We work with admitted and non-admitted and have lots of options to try to place coverage.
Uh-oh, I think we lost John. While we're waiting for John to come back to us from the great beyond.
I can pick up on just from the, speaking to State Farm is they have been, and again, I don't represent State Farm, but I've recommended a lot of people to State Farm just as a last ditch effort, just to see if they have availability for them. And it's kind of been hit and miss. So even in areas where you wouldn't expect, like deep in the WUI, where you wouldn't expect a home to be eligible, sometimes State Farm would write it. So I think it's just been whether they're looking at their concentration in a zip code or they're taking it on an allocated basis. I don't know the proper answer, but I know there are cases where people are able to get it, but it's not 100%, that's for sure, because they come back to us.
Yeah, well,
I guess
welcome
my
back, John.
internet's a little bit wobbly. Sorry,
Yeah.
guys.
No, it's fine.
But to Phil's point, it's still.
Oh, geez. Oh, how frustrating. So frustrating. We'll give him a chance when he comes back. But
Sure.
Ruth, you're a captive agent, right? You're a farmer's agent. Has farmers given you a lot more leeway now than they had in the past in terms of your ability to place clients outside of farmers if they want to take it?
Well, farmers is always, I have an old contract, so I have an open contract, and farmers requires first right of refusal. And then my next goal is to see if I can't get the client into an admitted carrier. So I too refer to other admitted carriers through my network of agent friends. And then if somebody says, no, I can't get anything, then they come back and we look for coverage for them. In the Oakland Hills, we have a lot of properties that are on what we call single egress roads and things like that are really very difficult to insure.
Mhm.
But, I always look for the admitted markets first, because one of the things that, consumers might not realize is if we're going to place it in a non-admitted market or in the FAIR plan, we need to do an exhaustive search to make sure that there wasn't other coverage available. We can't just plop it into something because it's convenient.
Mm-hmm.
And I take that pretty seriously.
Yeah. Okay. And we will be going into more detail about the FAIR plan in a minute. These are just admitted. These are companies that are admitted, meaning they're fully regulated by the Department of Insurance, and they pay into the Guarantee Association so that if they run out of money, there's still some money there to pay their claims. These are the non-admitted, some of the non-admitted surplus lines companies that folks are now in some cases finding success with. Phil, Ruth, you want to anything you want to mention about any of these companies?
I would just call out Heritage is one that it was interesting. They just opened up some much higher deductible options, which I think it's good to have that option, because at many of the town hall meetings and different meetings have been throughout the state, that's been something that people have been looking for in some cases.
Mm-hmm.
And of the ones that are on there, I mean, they're one that again, same thing. They've got some appetite, not a lot, but they're definitely worth trying.
Mm-hmm. So, Tony, this concept of a wildfire deductible, of course, makes my consumer advocate hair stand on end. I don't love it for lots of reasons. We've seen what it's done in the hurricane prone states markets. These the hurricane deductibles have just made such a mess. People have to have 3 policies, and it's just a mess. Is it something that the department's looking at?
Well, just to be clear, currently the department does not allow a separate, different deductible for wildfire versus regular fire.
Okay.
So it has to be the same. It could be high, but they both have to be the same. So we have been approached by stakeholder, other people, the industry, the legislature. There was a bill earlier in the year, I think it got vetoed by the governor, that would have required a study by the department on that very issue. But in general, I agree with you, Amy. It's a slippery slope. If you have so high of a deductible, to Ruth's point, that very few people might be able to use their policy, and they're going to be uninsured for a good portion of the policy if they have a partial loss.
But because the forms of these non-admitted companies don't pass by your agency for approval, right? So there could be like a non-admitted a policy sold by one of these companies that would have a wildfire deductible. Is that right?
In theory, yes, but our position is that the standard fire form in California applies to any policy written on a residence in California, which applies to non-admitted as well as admitted.
Okay. So, I guess, Phil, I'll ask you, you're an independent, so you have the full menu of options that you can look at least wherever you have a relationship. Some of these companies, you wouldn't even be able to place somebody with, right? Because you don't have an appointment with those companies. Is that right?
Well, we've got access, actually all these except Northlight we have access to. But I think, what it comes down to is looking at what's ultimately available. So when you're looking at a home in the WUI, you want to look at absolutely everything that's available and weigh out the pros and cons of the coverages, the costs, and the financial strength of the organization, those types of things.
Yeah.
I think you have to put it all on the table well in advance, so you know exactly, and also know that you've gone past any flags or underwriting, final approvals that are needed or those types of things. Because
Yeah.
I think that's the thing with when you get into these type of companies, sometimes they'll throw in the last minute needing additional clearance or something that isn't reasonable, that doesn't even make it a viable option anymore. So I think that's it, that you want to know what's viable,
Right.
not what's a possibility, but what's a viable option for you, and then go from there.
Yeah. John, glad to see you again. And I'm so sorry. I know how frustrating it is with the internet problems. My question I had just thrown to Phil was, this is just a list of some of the non-admitted companies that folks are having some success with in some situations. But not every, like, you wouldn't be able to put a customer with any of these, or could you?
Oh, yes, I have several of these that we have access to.
Okay.
So we use a lot of these. And I'm right by my Wi-Fi, so I don't know
Don't worry.
why that's happening. So I apologize. But yeah, no, we have several of these, and I probably can get to every one of these actually.
Okay. All right. So that's good. That's good. So, we already answered this question that persistency, loyalty doesn't seem to matter these days. Admitted versus non-admitted versus the FAIR plan. So I think our next series, actually, no, before we hit that, before we're gonna go through the FAIR plan slides in a minute, but this is sort of I guess it's kind of is the heart of the matter, and is is it a black and white that a FAIR plan policy is always better than a non-admitted, or the other way around? Are there absolutes that you could say one of these is always going to be better than the other, or does it depend on the features and the pricing? So I'll start with Ruth on that one.
One of the things I like about the non-admitted carriers is they have some of the features that the admitted carriers have, things like sewer and drain coverage and equipment breakdown and service line coverages. Sometimes the non-admitted carrier will have some additional coverage for things like theft of jewelry. I typically tell people if they have anything that needs a personal articles floater and they're going to use the FAIR plan, they really need to get a separate personal articles floater. Art collections, jewelry, things like that. The FAIR plan's not designed for those kind of coverages, and a lot of the difference in condition plans won't cover them.
Yeah.
And so when I can get a non-admitted carrier, that I'm going to do that first. And the FAIR plan says you need to exhaust your search of both admitted and non-admitted carriers before you place it with the FAIR plan, and you need to sign off as an agent that you've done a thorough market search.
Important. John, any absolutes as far as like non-admitted versus, fair plan? Is there a lesser of two evils, not to characterize the fair plan?
Right. Right. I go in exactly that order. I try preferred first, and then I'll go for the non-admitted, and then end at fair plan. I can't remember how you said it just a second ago, but the discussion and understanding what's available, what your options are, and then having that dialogue with the customer is really critical on making your package today.
Yep,
So it's not necessarily right or wrong,
right,
good or bad. It's an understanding of here's our options and here's what they mean to you.
right. Right. Okay. Tony, what is the Lasley list and why would it be useful to a consumer who's shopping?
Well, the Lasley list is, and it's on our website as shown there. You can look at all the insurance companies that are not admitted. It's the list of approved surplus line insurance companies. And as you mentioned earlier, Amy, they're less regulated in California than the admitted insurance companies like State Farm, Farmers, Allstate, et cetera. But they do go through some sort of financial review to ensure they have at least the basic amount of financial integrity to be able to sell in California. To the degree we sometimes find that changes, then we may take them off the Leslie list. But you can go, a consumer can go to that Leslie list and look at it and know that those were at least vetted to some degree, not as much as an admitted company because the laws are different, but it had some sort of venting with regard to financial integrity.
Yeah. And yeah, so okay, that's helpful. We're going to turn to Phil now. Phil has this double duty that I don't know how you got roped into it, but I'm glad that you're doing it, Phil, being running your own agency out and out there in where I'm
El Dorado Hills.
El Dorado Hills. I knew it was
El Dorado County. Yeah.
and also helping the Fair Plan out with with a lot of their I guess messaging challenges.
Yeah, so no, it's my pleasure. Technically, I'm the public relations representative for the California Fair Plan, and actually, it's a role I thoroughly enjoy because just like Tony, we've been to many town hall meetings and been around the state, having the opportunity to help educate, inform consumers on how our products work, and answer any questions they might have. So again, it's definitely a role that is meaningful to me, and grateful for the opportunity. So
well, we're glad you do it. A treasure trove of information for us and consumers. So thank you.
Awesome. Well, so just moving forward, I know we've been referring to the Fair Plan quite a bit. So we'll probably run through this fairly quickly, but basically, so if you don't know this, so the Fair Plan writes fire insurance for homes that cannot obtain coverage elsewhere from a traditional carrier. It was established as a temporary safety net. So the key was for the Fair Plan to step in until when it's needed, and then ultimately see the market restored. So the Fair Plan, it's a private association comprised of all insurers licensed to write property insurance in California. It's a small organization with just over 100 of its own employees and is overseen by a governing board that includes the California Insurance Commissioner and insurance company executives. The Fair Plan can insure any home in California as long as it meets the insurable condition. The main thing is if it's is not vacant for more than a year, and the other key thing is illegal activity. So again, falling under federal rules, as an example, I don't want to open this can of worms, but marijuana, if people are growing marijuana or other illegal activities, those types of things, that would be something that would need to be changed before they would be able to issue the policy. Yep.
Okay. All right.
So, we do accept credit card payments and increase the TIV, total insurance value, up to $3 million.
Okay.
And then we've been referring to these policies quite a bit, but the idea is that, so the Fair Plan is a named peril policy. So in addition to the perils that the Fair Plan covers, if you add the difference in conditions policy, it'll give you the key components of a comprehensive homeowners policy.
Okay.
So, ultimately the FAIR Plan's goal is to have you shop. So just about every document you receive from them will just encourage you to shop. And it's, again, the FAIR Plan's goal is to ultimately not be needed in the marketplace, because that shows that the marketplace has been restored.
Yep. I always remember the former head of the FAIR Plan saying, I live in opposite land, and most people who run an insurance company want to sell their policies. I don't want people to buy our policies.
No, and honestly, it's we're all in this industry. It's always sales driven, sales, and that's the exact opposite. So it's really cool, and they're just a great organization. So again, I'm happy to be part of it, and I'm here as a resource. My contact information was on there as well. So if there's ever any questions I can help with.
Yeah. With all due respect, of course, and gratitude that you're here, and there's a bit of been some friction between the FAIR Plan and the Department of Insurance. We're not going to get into any great detail there about getting the FAIR Plan to sell a more comprehensive coverage, and that is there is litigation going on, and hoping that gets resolved, of course, favorably for consumers. This is a publication that UP offers if you want to kind of dig in a little bit more. These are some of the add-on options that you can get through the FAIR Plan to to enhance the basic coverages. But I think, as Ruth said earlier, if you have jewelry, valuables, and art, that's not something, that you're going to want better coverage through a floater. Is that right? Did I get that right, Ruth? You're on mute.
Expect the FAIR Plan to understand how to build a dwelling. Don't expect them to understand how to insure your Picasso.
Okay, that's a
good one.
fair enough.
Yeah, I like that.
Yeah, DICs, John, this is something that this is in the pre-crisis universe. There were just a handful of DIC products out there. Now there's a lot. Yes.
Yeah, that wasn't even a term a few years back, but it's now part of everyday business. And to Phil's point, you put the DIC together with the FAIR Plan, it makes basically a kind of a bare minimum homeowners package, and that's what we're utilizing today.
Mm-hmm. So do you pretty much recommend to anybody who has no option but the FAIR Plan that they also get a DIC? Is that sort of normal, or no?
Period.
Absolutely. Okay, Phil, I see you nodding your head.
100%,
Same.
100%.
Okay.
Yeah.
Okay. All right. How can a consumer tell if an agent is up to speed on current or new options? Why don't I start with you, John? I know it's sort of a little bit of a tricky question.
Well, I think it's really about the confidence level in the questions and the dialogue that is going on. I've had Safe go on this morning in a huddle. Yesterday was Travelers. We're agencies that are keeping educated with what's going on with carriers. It's critical to to be able to update and inform our insureds. I think there's a bit of sense of really understanding, is the person really up to speed with the industry? If they can't articulate the market or what's happening, that's a concern. And I feel most agents are, because you also have the carriers pushing down, wanting to make sure that the agent or the broker is up to date and educated. So there's a process that really helps the industry, all of us professionals, stay up to date. The bigger concern is for me is the third bullet point, and that's really making sure it's not so much out for the best interest, because the agent, I feel in good faith, is going to be looking out for the best interest. It still may not be enough of what the homeowner needs.
Right.
And making sure that dialogue happens. At the end of the day, the homeowner signs and says, yes, I'll take it. I'll take your recommendation, or that sounds good, I want it. But the homeowner has to make sure they understand the coverages and what that means.
Mhm.
Was coverage A, that dwelling amount, really enough?
Yep,
I saved $150, but did I just underinsure my home?
right.
You
Right.
can't do that today.
Mhm.
I would add a couple things too, and consumers shouldn't be afraid to qualify the professional they're doing business with, and even talk to several, but especially in these circumstances. And some other additional things that they'd want to look at is what happens when a better option becomes available. So maybe you're settling for the best option today and something better becomes available. You want to know that you're with someone that can help you or guide you to the next step. So, the hope is that, the policy they're landing on today in these circumstances isn't going to be their forever option. We're hoping that even sometimes, if it's foolish optimism, it feels like sometimes, but there will be something better, and you're going to be with somebody that's got some flexibility to give you that advice or to make you aware of that. And I think same thing with consumers. Don't just make it renewal time as something you talk about at renewal period. I mean, stay tuned in, talk to your broker regularly just to see if things been updated, if things changed, just in case.
Yeah. Yeah. I mean, I think, look, when climate change started to be more apparent, and we had the series of bad wildfires that we've had, I think, everyone could sort of understand at one level, home insurance becoming more expensive in these areas, and but nothing like what's happening. I think no one could have imagined what's been happening in recent years. But we've always warned people against just trying to get the cheapest insurance. And that's because, of course, when our organization goes into an area where there's been a wildfire, 2/3 of the people come up short. And a lot of the reason is that they were working with an agent or broker and that was helping them find the cheapest premium, and wasn't really paying enough attention to the insuring the dwelling to value. Plus, we know that insurers have been using software that does lowball dwelling replacement value. So since that's already a problem, it makes it even harder for us to give consumers advice now, because to say to people, don't worry about the price, is that I don't feel right saying that to a consumer. So we know it's very difficult right now for all of you, but Ruth, do you want to take a crack at that last question there? How can a consumer tell if an agent or broker is looking out for their best interests or just wanting to earn a commission? We got to get you off. There you go.
Yeah, no, it's really interesting. I don't think people are just like, my experience of agents, especially in the captive world, is so many people are uncomfortable working with the non-admitted markets, or they don't have access to them, or they're uncomfortable working with the fair plan. And so, and then there's there's a network of brokers and agents who regularly work in those markets, and who are known to work in those markets. And I think that it's just asking questions, and and just what markets you have available. There's so much. When you talk to somebody, like you can tell if they don't have much experience. And I think that people are pretty savvy who are looking for who've got higher risk properties and high value, high risk properties.
Mhm.
The reality is, the way insurance is distributed, other than the fair plan, not all of us have access to all markets. So, sometimes we refer around to each other because we need to find an agent who has a market when we don't have it.
Yep.
These changes have been devastating to some agencies.
Yeah.
in terms of the turnover and tumult it's created and the, the loss of customers who've been longtime loyal customers.
Yeah.
And, to your prior point, Amy, where you were talking about customers being underinsured, the
Mhm.
marketplace on the television tells people to pay less for insurance.
Right.
And, if you believe the consumer that they want, there's one thing if they can afford to pay. There's another thing if they just have a reflex that says they need to save money.
Yeah.
Because, I've been in the fire areas too, and you see mansions and trailers.
Right.
Uh,
Well, okay, so is it, Phil, would you say that if you walk in and to an agent's office and they say, well, the only thing I can do for you is the fair plan, that's a pretty good sign that they're not really up to speed on what's happening?
Up to speed or be limited, sometimes, I mean, I think that's the reality. There are positions where you just don't have any other options.
Sure,
You're-
understood. But if that's the first thing they say
Yeah.
before they've even started digging on your behalf, I mean, right?
Yeah, absolutely.
So installment payments, let's talk about that for a minute. We are hearing from our very, very valued volunteer agent and broker advisors that some insurers have stopped allowing people to pay their premiums in installments, and that's a new thing. John, can you shed a little light on that?
Yeah, it's more on the auto side,
Okay.
number one, but yes, we have some carriers that are having high loss ratios with their auto. And so this is one example of how they're trying to get the premium they need to insure for the risk up front versus spreading it out over a monthly amount. So we are seeing that, at least on the homeowner side, it's still, you can have the escrow accounts and have it go monthly to your loan. And if you're going that route, or have monthly options typically still with homeowners. So luckily we're okay there, but
Okay.
it's just one thing they're doing. It's not to say that they won't. It's just we're now seeing it on the auto side.
Okay. Phil, I understand that the fair plan is working on installment payments. What's the scoop there?
Yeah, again, I know that's on the list of things that are being worked on. Additional monthly, I think monthly payment options is on the list. But right now, there haven't been any changes on the payment options.
Okay. All right. So I know that people are probably getting antsy. We hit the hour a while back, not too long ago, but I wanted to make sure that we got through all the key points. I think we is bundling still bundling, meaning putting your auto in your home, that's still a strategy that's helping you place some people. Phil, let's start with John.
Yes, I mean, some of my carriers will only let me write if I do bundle. I can't write a standalone home or standalone auto, but luckily the discounts are deep enough for a lot of, preferred and squeaky clean, if you will, that it's worth bundling. But we also have a big group where you have to, piecemeal, homeowners with company X and auto with company Y.
Right.
But we certainly look for it in our system. That's what we try to do first.
Yeah. Ruth, bundling, is that helping you be able to place a home if the person is willing to move their auto?
It doesn't help me with placement. And so some of the non-admitted carriers I work with give me a credit if we carry the auto, but I don't get a home credit back on the auto. If they do the DIC policy, bundling can help them with the overall cost of insurance. And if people are lucky enough to qualify for regular insurance, the bundling, most carriers, the bundling is somewhere between 15 to 25% off the home. It's the best way to lower the cost of home insurance that you have. And it helps coordinate the coverages. Number one issue I see on car insurance is underinsurance for liability. And, California homes are quite valuable. And we've seen lawsuits lately where, customer had $250,000 in per person coverage. And they still had to $100,000 out of pocket. So the attorneys have become very successful at at winning larger awards, and people need to be aware of that and insure accordingly.
I think the legislature just this year increased the mandatory minimum, but they're still probably very low. So I think we've hit on what the qualifications are that you look for in an insurance agent or broker: integrity, access to markets, and being up to speed on things. And I do think there are just logical ways to kind of, if you've been through this, you're still with us on this webinar. I think we've given you a lot of clues for how you interview somebody to make sure that they actually are that kind of proactive, beating the bushes type of a agent you need right now. This is another reminder that even with the pain at the premium pump, you still want to focus on making sure your home is insured to what it would cost to put it back. Getting replacement cost coverage over actual cash value, always important. These extras, getting an extended replacement coverage feature. I think, is it fair to say, panel, that even with insurers' reluctance to take customers in wildfire prone areas, that if they will take the risk, then they will offer these type of, the riders that make the coverage better? Is that a fair statement, Phil?
Yeah, if they're okay with it, then they'll give you the flexibility to use all the bells and whistles that would be available to anybody else.
Yep. Okay. So just a reminder, since we touched on jewelry, commonly your policy is going to limit what it's going to pay for these items. It can be $1,500, it can be $2,500, and you just want to know what it is. And if it's not going to be enough, you want to add a rider or a supplemental coverage for those things. So for a household that's on a budget, John, is it better to adjust your coverage limit upwards or buy an extended replacement coverage rider? Can you say?
I'd like to say both.
Yeah, well, that's what you say.
But you want coverage A to be coverage A. You cannot lower and cheat today. What does it take to rebuild your house? What's that dwelling amount? And then you need the rider. You absolutely need and most of the standard companies have, anywhere from 125 to an extra 100%. But we're pretty firm believer in get coverage A, the dwelling, basically right, if you will.
Get it right.
And then go for 150%, extended replacement.
Okay. Ruth, how high a deductible is worth the coverage trade-off, would you say? Just is it very much dependent on the financial resources of the homeowner?
Well, I have a formula I do with clients. I call it the bank the difference formula. So I look at what's the difference in the deductible and what's the difference in the premium. If I was to put the savings in the bank, how many years would it take me to bank the difference?
Mm-hmm.
And for home insurance, I usually use if it's within 5 to 7 years, it's adding value to take a higher deductible. If it's over 7 years, it's cheaper, but it's not adding value. So, and I have a little lower year number in car insurance. That being said, I will have very existential client conversations with affluent clients who can take higher deductibles, and it's just, they say they want to do it. So
yeah, it's a personal choice. Okay, so we're gonna have to wind down here. This is, again, this slide deck will be available on our website. These are some of the questions that we recommend asking. Tips to save money. We've been talking about: do as much mitigation as you can, raise your deductible, and if possible, reduce or eliminate buckets of coverage you could live without, high dollar limits on contents or other structures if you can. Unusual options only to be considered in because of the crisis conditions in the market in a lot of areas. ACV only, you would only consider that if you're, let's say you're a senior and your home's paid off. Reducing your personal property coverage, reducing your loss of use coverage. Again, that would only be a last ditch kind of an option. I don't think we're going to have time for the reverse mortgage question. So last question before we wrap up, for each of you, any other tips you have for consumers shopping for home insurance in the current market that we haven't covered? So I'm going to start, I'll start with you, Tony. Anything you want to throw in?
Well, I would just say that, just plug the Department of Insurance. If you have questions, concerns with an insurance company or an agent or broker on issues that arise, give us a call. We're happy to take that issue in, look at it, make sure everybody's doing the right thing here and in your best interest. So contact us. We're a resource.
Thank you. John?
Yeah, two things. I think today you need to spend more than 15 minutes, and it may cost you more than 15% to get the right coverages. You can't afford not to take your home and work with any broker or agent and just to ask the questions to be properly insured.
Yeah, I believe, but that's me, I'm a little Pollyannish, that we are going to see better times, hopefully soon. Ruth, how about you?
I would just encourage people to really think about their to do their fire drills, to think not at a certain point to not necessarily worry about your house, but worry about your family and your pets, and figure out what's your exit strategy, how will you leave. I regularly hear from people in the Oakland here. I live this close to the fire department. I live here at, we have, these things that we've done or something else. I'm like, you have to realize that if there's a wildfire, how many people need to exit the same area on the same roads before the first responders can get in. And so I think it's really important. It's really important for people not just to think about the insurance that comes with living in these areas, but to really think about how they're going to protect their family and have their own exit, their own disaster strategies.
100%. Phil, any last thoughts?
For now, and I get this question every day, so that's why I'm bringing it up. I'd say when it comes to home hardening, the expense of home hardening, I would do things that make you feel safe. Focus on your safety first, and we're going to see more to come on what options carriers are going to offer discounts for. But really, it's all expensive to do. So you really want to focus on things that are going to make you feel safe first, or make sense to you first, not so much focused on what an insurance company may or may not give you some favor for down the road. But stay tuned to that, because obviously we're going to see a lot more come out about that in the coming months.
Yes. Okay. Well, it's been a fabulous, talking about insurance can never be characterized as fabulous. I'm just so grateful to be able to mine your four brains and your four very deep knowledge about the situation. I want to thank you again for sharing your expertise with us as a volunteer with no compensation. It's not every professional that will do that. It's very, very valuable to us, and we really appreciate it. So with that, I'm going to thank you all, to our panel, and remind our viewers that we will make the deck and the recording available at our website. And if you have questions, you can shoot them to us at info@uphelp.org. And just remember that on our website, we have lots and lots of information. So if you go to the Get Prepared tab, you'll find all kinds of tips and advice to add to what we presented to you today. With that, we're going to wrap up, and thank you again to my team. Have a nice evening.